Life insurance needs analysis and suitability. So what this has to do with is figuring out what program is the best fit for the client. That's really what suitability is. It's, hey, which of these plans is the best fit for my client based on a few different factors. We're going to go over those factors here in just a minute. If you find value in these videos, please subscribe to my channel and turn on post notifications so you can be alerted whenever I post a new video. And also check out all my content. It's going to help you pass your life insurance exam on the first try. So in determining which program we present to someone and we sell someone, we have to figure out what the program is most suitable for them. So one of the factors is survivor protection. So what this means is when someone dies, they have their survivors, okay? And that person is going to have a different financial obligation to their survivors when they pass. It's called their human life value is another word for it. And essentially what this is how much is your life worth monetarily right now based on the income you make or the services that you're providing. So in one situation, I'll give you an example, say you have a breadwinner. Say someone makes $100,000 a year. When they die, essentially they are worth $100,000 a year to their family financially, right? So part of the suitability is determining, hey, how many years would you want your income to be continued to your loved one if you die? We typically see this more with younger families, obviously if they have kids, right? If someone's got young kids and they're the breadwinner, they want to make sure, hey, if I die, my family's going to have this income continued to them for X amount of years. Now, on the flip side, we have protection for the person who may not be the breadwinner. Say someone's a stay-at-home mom and they're a permanent caregiver. That person, if they die, the breadwinner can't stop working, right? So they're going to have money to make sure that they can pay for care, right? Unless they want to go get a new girlfriend or boyfriend or spouse or something, but I don't think they want to jump on that quick. So they're going to want to have money to take care of the family, okay? So what that goes into, if someone's like, hey, I'm young and I want a lot of coverage for like a low amount of money, then we're going to drift more towards a term policy. So you see why? Because term, you get a ton of death benefit for less premium. So you drift more towards a term policy if someone's looking for income survivor protection. You kind of drift that way more than whole life because that person, their budgets may be tight based on their income and stuff because they have other obligations to their family financially. So that's just an example of, in that case, if someone's like, I want a bunch of money, I want to continue my income for the next 20 years if I die, I'm going to gear more towards a term policy than a whole life policy. I'd say, okay, $100,000 times 20, that's about $2 million. You need at least $2 million in life insurance, not factoring in inflation. A next point of suitability is cash accumulation. So when you have permanent whole life insurance policies, there's a feature called cash value where cash accumulates inside the policy. So some people may have different cash accumulation goals where they want to have a certain amount of money accumulated by retirement, or they want to have a certain amount of money accumulated by the time the kids go to college or something like that. So they can have certain goals based on cash accumulation and cash value in a policy that you will want to structure a policy to hit. Now, if the policy is, if they are like, I want to have a lot of cash value, if that's their goal, you're not going to sell them a term policy because term policies don't have cash value, right? If they're like, I want a guaranteed amount of cash value that I can access at a certain time, then you're probably going to drift more towards a whole life policy. There are some universal life or variable universal life that will have cash value access, but it could impact how long the policy lasts and all that stuff. I have a whole video on every type of life insurance policy you're going to need to know for your exam. You can check that out. I'm also going to put it up at the end of this video. But so example, right? That's so cash accumulation is another factor. So we have survivor protection so far. How much money are people going to need when you die? And then cash accumulation. How much money does someone want to have when they reach a certain age, and how much cash they want accumulated in their policy? And then next is liquidity. So liquidity is how much cash value do they want to have access to at a certain time. So it goes into cash accumulation. They kind of go hand in hand. So liquidity means how much do you have access to for funds in terms of policy loans on the cash value. So you want to factor in if someone says, I need to have like this amount of money liquid at a certain time, meaning I can just access it at any time I want, then you're going to want to factor that into the suitability and what program you present to them and how it's all structured out. Now, next is estate creation. So life insurance creates an immediate estate, right? An estate is what you're leaving behind to someone when you die. Life insurance creates an immediate estate. So someone can go from having absolutely nothing and no estate to the second they get life insurance, they have an estate created. So And if someone says, when I die, I want to have a guarantee amount of money left to my loved ones, no matter what, no matter how old I am when I die, then you want to look at a certain type of policy that will have those guarantees in place for them, like a permanent whole life policy or something like that. So estate creation, and also it depends on how old they are and how long they need that estate left behind for, right? For instance, the policies that we sell here at Senior Life Services, by the way, if you're interested in seeing what we got going on here, we all sell life insurance from the comfort of our own homes, and we provide you all the clients and prospects and everything you need, all the systems to get set up in full training. But if you, we sell whole life policies for senior citizens that are a little bit smaller in face amount. So they want to have anywhere from a $10,000 to $30,000 estate typically created to make sure that their funerals, cremations, end-of-life expenses, all that stuff can be paid for. So when we sell our programs, all the programs we sell are designed to create immediate estate for someone when that person dies, with a specific purpose of exactly what that estate is going to do. So life insurance can be used to create an estate and leave an immediate legacy to someone's family. So you want to ask and have that factor in, hey, do you want to have an estate no matter what, no matter how long you live, or there are certain estate needs depending on like how old you are when you die and stuff like that. Like if someone's got kids and they're young, they're going to have to leave a bigger estate behind than if they're in their 80s and their kids are doing their own thing. Next is estate conservation. So this is one of the last things that you're going to have to know about for product suitability is estate conservation. So if someone is super wealthy and they're leaving behind like millions and millions of dollars, I know that the tax laws change all the time, but so leaving behind millions and millions of dollars, their loved ones may pay an inheritance tax on that money. So they want to make sure that they can have a life insurance policy to cover that tax, right? So say someone leaves $100 million behind, and when they die, say their loved ones, I don't know what the tax rate is, but just say it's 50%. So the loved one has to pay 50% tax on that money. So they want to say, okay, well, if I leave behind $100 million and they got to give $50 million of it to the government, then I want to have a $50 million life insurance policy to cover the estate costs, right? To cover the estate taxes or whatever it may be. Or there may be other things where inheritance taxes that people want to cover their estate. Maybe there's like legal fees and stuff like that. So those are the main reasons. So what we looked at here is survivor protection. How much money do I want someone to have when I die? Cash accumulation. How much money do I want to have accumulated at a certain time? Liquidity. How much money can I access at a certain time? Estate creation, which is how much money do I want to leave in my estate as a legacy, and estate conservation is how much money do I want to protect from the government coming and taking it all from taxes. So I hope that helped you guys pass your life insurance pre-licensing exam and learn a little bit about suitability. Check out this next video coming up to learn about the different types of policies that you'll be selling once you get your insurance license.